Hey guys, hopefully everyone's doing okay. We're going to have a quick little class on mortgage forbearance. I've been getting a lot of questions. What is mortgage forbearance? Does it apply to me? On and on, right? So we're going to shoot through what the new mortgage forbearance program is. The forbearance program was put into place by the government, basically suggested by the government. All loan servicers are handling this a little bit differently. Okay, so whoever you get your bill from, whether it be Chase, Wells Fargo, Bank of America, Cenlar, PennyMac, American Mortgage, on and on, right? It's all going to vary according to who services your loan. But this is basically how the program works. We have some loans held with larger banks and some loans held with smaller banks, personally. I've gone through every single one of them just to see what people and what servicers are doing. But here is usually the basis of what we're coming up with. We're coming up with a non-verified verbal statement saying that you were financially affected by COVID-19 and automatic suspension of your loan payments for 3 months. After your 3-month term is up, they will, with documentation, consider extending your forbearance for 12 months. Here's the big thing about forbearance. Forbearance, for the most part, means that after your forbearance is up, that money that you forbear immediately comes due. So if you have a $2,000 a month loan, you go 3 months, $6,000 is due on the 4th month with the 4th month's payment. So you have to be careful before you get involved in the forbearance program. I recommend to only get involved in a forbearance program if you really, really need it. Do not go and just try to get your piece of the pie, get your 3 months off from paying your loan, and think everything's going to be great, because it's not the truth. But this is what the banks are saying. They're saying that if you were current on your loan as of January 31st, 2020, and you do not pay your loan payment because you got accepted into their forbearance program, they will continue to report your loan as current to the credit agencies. If you were not current as of January 31st, 2020, and you do not pay your loans saying that you were affected by COVID-19, they will continue to report your loan as delinquent after January 31st, 2020. It'll continue to be delinquent, according to the credit agencies. So if your loan servicer is going to accept you into the forbearance program, it depends on how they're going to report your credit due to your past payments. Okay, so if you were always bad, you're going to continue to be bad. If you were good, they're going to report your loan as current, but there will be an attachment to that payment noting that you are on a forbearance program. So they are going to report you as good, but there will be a code attached to it saying that you're on a forbearance program. So new credit that you look to pull will see that you applied and were accepted into a forbearance program. All loan servicers, also, their application is slightly different. Some are allowing you to dive right into the forbearance. Couple questions. Here you go. 3 months off. We'll see you then. Certain servicers of ours, like Chase is almost asking for an entire financial statement before they consider you into the forbearance program. Some of the servicers are saying that we will be sending you delinquent notices during your forbearance program. I think that's more of a scare tactic because people get very nervous when they see mortgage delinquent notices. They're saying to ignore them, but that's what some servicers are doing as well. Me personally, we're doing okay. The reason I'm looking into it is we're planning for the worst in case the world ends and all of our tenants stop paying. We have to be prepared somehow. Okay, so this is what they're asking of you if you do the forbearance program and do not pay for your 3 months or whatever you're accepted into, right? 3 months, and if they allow you to go for longer, up to 12 months, 360 days. How do they want their money back? Okay, So like I said before, the by the book is they want their money back as soon as the forbearance period is over. Well, obviously you're not going to have that money, right? Or else you wouldn't have to put your loan on the forbearance program. Option one for them is they say they're going to open up an account right next to your mortgage account, and side by side you're going to pay two loans. So you're going to start paying your mortgage again, and then you're going to have another loan that's running right alongside your loan. So you're going to have two loan payments when your forbearance program is over. They're going to give you an extended time to pay off the $6,000, $12,000, $18,000 that you didn't pay, and you're going to have to continue to pay your regular loan payment once the forbearance program is over. The second way that they're saying that you could pay back the money is they will re-amortize your loan. So they will modify your loan. They will tie those payments, re-amortize your loan, so now your principal balance will include that money, and it will be readjusted for the life of the loan. Not a bad option. I like it. Because of the loan size and the duration that your loan probably has left on it, that won't be that much of a hit. If you have 25 years left on your loan and you have to throw an extra $10,000 into the principal and they re-go through the payment, your payment is not going to go up that much. And the third way that they say they might do it, with heavy documentation, okay? So this is not going to be a program that they just do this option. The option that I'm talking about is just throw the payments on the back of the loan. Who wouldn't take that option, right? If you're telling me in 25 years I'm going to have to make an additional 3 payments, I'm going to have to make an additional 3 payments in 30 or 25 years, that money is not worth what it is today. I will jump all over that option. But if you cannot prove that you were heavily financially impacted, or that you will have no other way to pay this loan back, that will be a situation that is heavily fought, because the banks know that they're getting paid. They need this money now. They don't want the money in 25 years. The money is no good to them in 25 years. Banks make the money on the front. They don't make it on the back. That's another reason why the banks are always pushing refinancing. If they could keep you in the frontmost part of that loan for as long as possible, they're making the most amount of money. If you go 10 years into a loan, and they'll push you to refinance because it's starting that process all over. That loan is heavily, the interest payments are in the beginning of the loan, most of the payment is interest. That's their money. So if they as the loan goes on, they make less and less money. So they want you to refinance so they could keep saying that beginning stage of the loan. That's all I got. Hopefully you guys liked it.